Joining us now, head of the earnings calls, Mark Mahaney of Evercore ISI. Mark, great to see you as always. Thanks so much for joining us. So let's do Airbnb first. How does it compare, in particular, relative to some of the other travel and holiday companies we've seen report in recent weeks?
Okay, thanks, Wilfred. I think 2 points. One is that this has been a high bar expectations quarter. I think we've tracked almost 90% of consumer internet stocks have traded off on the print, almost irregardless of their results, i.e., the expectations were high. Multiples in the group are still elevated. They probably need to come down. And with the travel names, the story's been very consistent. Dramatic recovery in leisure travel demand from the March quarter to the June quarter, and then a little bit of a pause in July. Booking.com talked about it, Expedia did, and now Airbnb. Airbnb is warning that these Delta-related issues are causing rising cancellations and a little bit of pausing in bookings. Growth will still be above, or numbers will still be above where they were in the worst of the pre-COVID, but the momentum is fading this month. The question is just how long will that fade occur?
Does that help, though, relatively speaking, Airbnb compared to hotel companies?
Yeah, I think there's a couple of key takeaways, and some of these are real structural wins for Airbnb from the COVID crisis. Across the board, consumers became more aware of alternative accommodations during the COVID crisis, and they booked more of their leisure travel with alternative accommodations companies, i.e. right down the runway for Airbnb. Airbnb has materially gained share as an online leisure lodging company over the last 12 to 18 months. They've recovered more quickly than Booking and Expedia. It's proof that alternative accommodations have won. There's a couple of other ways in which I think Airbnb has won. They really took out a lot of costs that they should have taken out prior to COVID, but COVID forced them to do that, and that's a good thing. So we like Airbnb as an asset. I realize the near-term troubles with this company in a COVID environment, but if you can look beyond that, we think this is the share gainer in online travel, high-quality business model.
So, Mark, then what do you think of DoorDash, which saw revenue grow, 83% for the quarter? I mean, this was really the quarter where we were going to see this name lapping those pandemic comps from last year. Did it hold up?
It held up pretty well. It's just, again, it's a high bar stock. Now, the difference is they've got the real tough comps because they had a surge in business. And so you already pointed out, Deirdre pointed it out, that you've had this dramatic deceleration in revenue growth and in order value. Of course, you're going to have that because those growth rates last year weren't sustainable. They're going to be very high. They're going to be very impressive, but they weren't sustainable. What DoorDash needs to talk about on their earnings call is their ability to expand into international markets and their ability to expand beyond restaurant delivery. If they get both of those right, there's a lot of upside in the stock, but that's a lot to get right. We're on the sidelines on DoorDash.
Do you think, and I say this given some of the commentary we've gotten from the FTC and the new chair there, Lina Khan, in recent days, even just today, but in recent days around consolidation and competitive pricing across a variety of industries, do you think DoorDash is going to be able to do some sort of deal, as we've been getting reports that it is considering such?
Morgan, you're raising a big risk. I think M&A is off the table, and that means that growth projections should be tempered across the board for large cap, mega cap tech companies and internet companies, because M&A is a reasonable growth driver, but it's off the table. I mean, maybe they can get off a deal, but I think it'd be very hard. Also, you have to think about it from the acquiree's perspective. You think about selling to one of these larger cap companies, you have no idea whether your deal's going to go through. It'll probably push you to go it alone, go it organically.